Thanks everybody for joining us today. We appreciate you guys taking your time to join us for this webinar. I guess we'll just start with some introductions. My name is Jimmy Burgess. I'm a senior accountant here at Letts & Company. I've been here for about 5.5 years. I'm in the client accounting services department, and I work with a lot of smaller contractors that are in QuickBooks. And I work with QuickBooks on a day-to-day basis with a lot of clients that use job costing, even if they're not contractors, some clients that use job costing. And so I'll pass it off to you guys.
My name is Mike Perry. I'm a director in the client accounting services department. I have been here 16 years now, maybe 17. I've lost track. And also deal heavily in the construction side of the construction world, especially with QuickBooks support and job costing as well.
And Clark Beller here, audit director, been here the last 9 years. And while I don't live in the QuickBooks world, we're often interpreting and utilizing all of the reporting out of QuickBooks. And so thought I'd be a decent resource from a financial statement perspective if we had to circle up on anything. So.
Awesome. So here's kind of just a little bit of agenda for what we were planning to talk about this afternoon. We utilize the job profitability reports in QuickBooks for a lot of clients. And so we kind of wanted to just go through the basics of the reports and discuss why we like to use them, you know, the two different types of reports that we have, and the ability to customize those reports. And you can use them to complete job schedules if you're a percentage completion contractor. You can also use them to estimate your income if you're a completed contract employer. And they're just great for just general job revenue and cost analysis in a summarized format. But while they are good reports, there are definitely some issues that people come across and some that you can and cannot fix. So we're going to kind of just try and do high level discussion on those and go through kind of the things that we see on our end. So I'm going to just flip over and go over to the QuickBooks. So you guys should see, and I should explain that we are doing this on QuickBooks Desktop solely this afternoon. A lot of people use QuickBooks Online. And, you know, we'd like to do a presentation on that in the future, but the reports that we like to use for contractors are mainly in QuickBooks Desktop. I'm also in the enterprise version. So some of you are probably in Premier or QuickBooks Pro. I don't think anything that we're looking at is going to be really any different than what you would see on your end, but I just wanted to make note of that. Okay, so there's a few different ways that you can get to. I need to hide this. Bear with me for just 1 minute here. There's in QuickBooks with a lot of other things, there's a million different ways to get to these reports. As you can see, we're in the contractor edition. So if you go to the menu bar and you go to job costing, you can get to the job profitability reports from there. You can also find them over in the reports section under job costing and under job. I mean, they're everywhere. You can find them basically everywhere. But the first report that I'll bring up here is just the job profitability summary report. And by default, the report just brings open all dates. So it's going to show the job costs for all jobs that you have, no matter what the status of them is. Anything that's had any sort of general ledger activity coded to it, it's going to pull up. And you'll see that the default is by alphabetical order. So we recommend that, a job numbering structure is kind of helpful in QuickBooks for your jobs, just so that you can kind of get an idea. You can see on here, this one says 2501. That job started in 2025 because that's what this sample file that we're working in, the fiscal year is 2025. So the job number can reference when the job started. So that can be helpful when you're looking at a report where jobs are crossing over from year over year. But you will see at the bottom here, overhead is a separate job item that our customer that we set up with some jobs, and it's not in alphabetic order. And that is because you do have the ability, if you go into the customer center, where you can actually drag these customers in a different order if you don't have too many, to where you can reorder. If I was to pull that overhead, I could move it up and have it populate at the top of my report. I like to have it at the bottom so I can see my jobs first and see anything that's coded to an overhead item down at the bottom. If you've worked in these reports or in QuickBooks Desktop, you'll know that you can drill into anything that you want, so you can see all the costs behind anything that's populating on this report. And then the one thing I'll note on here is that, some of these you'll see where Brandon Wilson is a customer that was set up, and there's some costs that are coded to this, but it's not a job. And we see that a lot where people are not coding some of their job costs to a specific job, just the customer. And so those jobs will populate underneath this customer name rather than under the job. So this would signify to me that maybe we need to look at what's getting coded to this. We might need to reclass it. Let's see here. So then I'll go ahead.
A quick question before you move along, Jimmy. So in this case, actual revenue is just billings, right? If you adjusted for an over/under in here, over/under billings, that wouldn't necessarily pull into revenue unless you coded it to that job, right? So most of the time, that's just going to be whatever billings you pushed out the door.
Correct. Anything that hits this revenue account is going to be the result of a invoice or a sales receipt or a deposit. And that's important to clarify, because that is one of the issues that we'll talk about with these reports, that sometimes things show up reducing this revenue account column. And it makes it more difficult when you're looking at the P&L and matching your revenue with the job cost reports. Sometimes they don't match up, and that can be one of the issues with it.
Got it. And then on the other side, for our costs, that's mostly going to be our direct materials, subcontractors, labor, those types of things. But down in your overhead bucket, does that show up in cost of sales as well? Then those accounts would be coded into cost of sales and not G&A on your income statement.
So the default for this report is it's going to pull over all income and expense accounts.
Okay.
So this is pulling over costs that are getting coded to your below the line costs under cost of goods sold, or under gross margin, and your cost of goods sold accounts. One of the nice features is you can change that so that if you don't want to look at all of your income and expense accounts, maybe you want to just look at your cost of goods sold accounts. You can change this report to show all cost of sales accounts, and it's going to yeah. And it's going to pull over anything that's coded to revenue or a cost of goods sold type account. Perfect. So that's important to note when you are looking at this report. So I'm going to flip it back over to all income and expense accounts.
Down to.
But to your point, if we look at a profit and loss statement right now, and we run it for the fiscal year for this entity, and we run this report for the same time frame. If we want to compare, which when we're looking at these reports, we like to be able to cross-reference it to the P&L so that we can make sure that what we're job costing we're job costing everything in total, and it's reconciling to our P&L. So if I look at revenue right now, it says 753 on my P&L for that period. It's off by a little bit. It says 755. And similarly with the costs, it says 618 on this report, and that's because we're looking at all income and expense items. But if I just toggle this back to just show cost of goods sold items, this column will tie to what we're showing on the P&L. It should. And if it doesn't, it's because of some of these little issues that we're going to kind of explain with, why it might not in total. So this, if I'm just looking at cost of goods sold accounts, 7,572, and it's off. And so that's kind of a red flag for us. We're saying job profitability reports, in theory, we should be job costing everything that we can. So if our job profitability reports aren't reconciling to the P&L, that's kind of a red flag that maybe we need to look at something that might be throwing it off. And so one report that is very helpful is you can look at unassigned expenses that are not assigned to jobs. So this is going to kind of help you pinpoint, maybe there's something that was posted to the general ledger, didn't get job costed. It's in, a direct cost of goods sold account, but we need to figure out why we didn't job cost it. And I threw this little wrench in here. So if we change it to look at,
I want to change the date to for just income and cost.
yeah, so then we'll switch it to there's a check in here for $10,000 that was to Avenue Electricians. That makes up quite a bit of the difference between what we're showing on this job profitability report and what we're showing on the profit and loss statement in our cost of goods sold account. I just added that transaction because this report, everything in this file was job costed. So I added that transaction in there just so that we could run this report to show you that you can utilize this to help you determine those variances between the P&L and the job summary reports.
So a lot of these reports by default are defaulted to either all accounts or all income and expense accounts. And obviously, like this report, if we left that default of all expenses, we're going to see everything, all overhead costs in here because we're not coding them to jobs. That's why we go in and we customize it to show just ordinary income and cost of goods sold. You can then memorize that report and put it in your memorized reports so that you don't have to change that every time when you do that. That'll help you to have a report that you can just pull up quickly and see if there's anything in cost of goods sold that did not get coded to a job. Because by default, we want everything in cost of goods sold job costed so that we make sure that those are all direct costs that are up there.
And you'd think that would be a month-end close procedure, right? So once you get to the end of the month, run that report and make sure everything's costed before you try to tie out your job schedule.
I would recommend doing that.
So just as a reminder or refresher here, if you just press memorize like I did, you can save the report up here under memorized reports, and you can go back in and pull up in that report whenever you need it at the end of the month or intermittently. So we talked about the the summary report. The other report that's helpful is just the specific job detail report. So if you look at the job profitability detail, you can, it's specific to one specific job. So if I want to look at the revenue and costs under a specific job, this report is going to pull it up by item. And it's going to show, you know, what we costed for plans, building permits, everything that we'd set up for the project. And similar to the summary report, the default's going to show it for all dates. This report's helpful if you want to get in and see the detail, you know, behind the job performance to see whether, you know, there were things that were, you know, costed more or less than what we were kind of anticipating.
Look, the key thing here is if you don't use items on your expenses, so like when you record a bill or enter a check, if you're not using the items tab, this won't have any detail in here. It'll just, everything will be in a bucket called no item. So the detail report is only useful if you're actually using items for all of your expenses, if you're using the items tab, not just coding it to cost of goods sold in a job.
Is there any way, Mike, that you can just set up a cookie cutter, you know, for instance, item for each job that you can start with, you know, so it would start with all of these items already in it, or is that something that you have to load into each job?
So QuickBooks by default has these items when you set it up, contractor one. So your item list is going to dictate it. You don't have to set up for each job.
Got it.
So the item list in general is for the whole QuickBooks file. So this, Jimmy, if you pull up one of the expenses and we'll show them the two different tabs. And so of course we got to find one that's a check or a, there's a bill right there. Second one down. So like when you're entering a bill, there's two tabs down below, an expense tab and an items tab. If you're using the expense tab, just throw something on that expense tab and put it to a cost of goods sold account. Put a huge dollar amount. Oops. Job related cost. And then put that job. You remember which Campbell. To change your amount. So now go back to that. So when you go in here, you see it says no item down below. So if you were to just do it the way that where you're just using the expense tab rather than the item tab, and you're just putting all your costs in there and not actually putting them to a certain section of an item, then the detail report's not going to be helpful to you at all. And along with the detail report, the other thing that's not going to be helpful would be the estimate versus actual cost report by job, which again, if you're entering estimates into QuickBooks, which not all of our contractors enter estimates into QuickBooks, but you can run an estimate versus actual and look and see, okay, what did we estimate siding to be and what did it actually come out to be? And if it's a large variance, why?
So the other thing that we didn't really mention is with the going back to the job profitability summary reports, the default is that these reports are going to pull over just income and expense items. We, you know, depending on what type of contractor you are, you might be percentage completion, you might be a complete contract. It's worth noting that because we see on our end that there are some contractors that if they are completed contract, they'll code all their job costs to the balance sheet in a, you know, construction, maybe job construction in progress account. Similarly, if they're with their billings, they'll have a customer deposits account. And if you are that type of a contractor and you run this report, it's not going to show you anything because the default on here is income and expense accounts. So you can change it like we were looking at before, to where you filter it down and you can select, multiple accounts if you want. You could pick, construction in progress, and you could look at your customer deposits account. And it's going to pull open, just the costs that were coded to your construction in progress account. And it'll split it out by job. Now, the summary reports may not be as helpful for the contractors that are coding their costs to the balance sheet. And if we have time at the end, we can show you some additional custom reports that you can use in QuickBooks. But I just wanted to mention that because, not everybody's exactly the same. So it's worth noting on the reports how that information is populating on there.
And we generally see that with our home builders, where they have closings for each job. And what they'll do is they'll code all of their costs to construction in progress. They'll code all of their deposits to either customer deposits or a loan if they're carrying the loan. And then when they actually close on the house, they'll record the closing statement and move everything to the profit and loss at that point in time.
The other really important piece with customizing the summary reports it's really helpful is we do this with a lot of our clients, and it's updating the status of the jobs so that you can filter this for jobs that are in progress or jobs that are closed. And this can be done from the customer center. If you go there and look at a specific job and drill into it, under job info, job status, this drop down arrow, it's going to show none for if you've never updated this, but you can come in here and you can update your jobs to show them as either closed, in progress, or you can leave them as none. And that just is going to give you the flexibility to run these reports and filter those reports for the specific jobs that you want to look at.
If you've never done that before and you have a ton of jobs that you want to do, there is a way to do it under add, edit, multiple lists, and pick customers, and then you'd customize it for job status. You have it right there.
Yeah.
And you could sort it, and then you can copy down and stuff, and you can do it relatively quicker.
Yeah, much faster than having to go into each individual job, which might take some people a long time to try and go through an update.
So when we get a new customer or client in that has a QuickBooks file that hasn't been using job profitability, do you guys traditionally just pick, hey, this is our cutoff, these are the jobs we're going to start doing it on, and then kind of let that year wash itself out so then we get a full year stood up? Or is that different? Is that a case by case situation?
It's probably more of a case by case situation, but one of the things I would do is I'd make sure that I cleaned up all the closed jobs, and if there's a bunch of stuff in there, inactivate some of those so they don't so their list isn't overwhelming for them, and it's easier for them to pick through the ones that are actually active. And then we'd start making sure that all the new jobs were properly done. Now, if they had some open jobs and there wasn't a lot of costs associated with them, we might have them go back in and change some of the open jobs or all the open jobs. Just kind of depends. Like, if I have a client that's like, oh, I have 3 open jobs, I might be like, well, let's just get all the open job costs correct. If they have 30 open jobs, we might just draw a line in the sand and say, we're going to start doing it correctly going forward.
Yep. So I would say a lot of times from my experience, the bonding or banking institution will come to them and say, hey, we need to get internals or a comp or a review going. And that might be at the middle of the year. And I think that's our biggest struggle most of the time. That first year is just getting the process in place so that we can get effective information for financial reporting.
Sure. And I think I mentioned this before, but by default, we want everything that's in cost of goods sold to be coded to a job and also be using the items. That's going to give you the most flexibility as it relates to running reports, and the ability to manage these jobs to the best of QuickBooks ability. Now, there's some exceptions if you're using some sort of outsource or outside software to manage jobs and things like that. If you're not using QuickBooks itself to manage those jobs, but if you're using solely QuickBooks to manage your jobs, then we would definitely recommend going that route and using the items tab for all expenses that go to cost of goods sold, and making sure that each one of them has a job associated with it.
And a good practice item on that is, just setting up an item that you're going to use for those indirect costs or overhead costs.
Yeah. So as it relates to that overhead, when I look at that overhead, and if this report was ran strictly by income and cost of goods sold, the only thing I would see in that overhead job would be mostly my labor for my guys if their idle time. So let's say they were meeting with a prospect and they're not a client yet, and we don't have a job associated with it, so we're not job costing that time. Or if they're working on admin, or they're basically it's my direct labor idle time, for lack of a better description.
Yeah. And everybody does indirect or direct costing a little bit different.
Yeah.
And that is really a case by case basis. And we work with management on how they want that to look.
Yeah. And the other thing to note in QuickBooks for payroll, you can only choose one payroll expense account. So your FICA taxes will either go all to a cost of goods sold account, or they're all going to go to an overhead account, and you'll just have to journalize the difference if you want, if you want to split them up. So a lot of times we'll see people put it all in job labor or cost of goods sold because, they only have one office person or whatever. And so then we'll have a little bit of stuff in overhead here, or expenses that will be in cost of goods sold that won't be on our job profitability summary report, because those the payroll taxes for those office staff will not show up there into any job, because we're not job costing those.
So with those ability to filter by or assign a job status by job, if I go in and customize this report and I want to type in job status, this is going to allow me to look at all the jobs that are in progress during the year. And if I want to look at it for the year ended, I can just type in all. So this would be basically contract to date costs for this job. So it could be costs from 2024, since the job started in 2024, and 2025. If I want to just look at year-to-date costs on the jobs in progress, I can change this date range and just look at the specific, costs and revenue for the year. Similarly, if I change it to my closed jobs, I can do the exact same thing. And this is helpful because you may have a job listing that is huge and there aren't any jobs that are carrying over from year 1 to year 2. You don't want to be able to see everything on the job profitability summary report. You want to be able to filter it down for just the jobs that closed in the year and just the jobs that are open as of that year. So assigning the job status by job can be very helpful for getting some valuable reports, because we can look at this one and look at our, if we're looking at our jobs in progress, and if we're a percentage completion contractor, if I want to look at my costs to date, my contract to date costs on my jobs in progress, I can look at this, and this should tie into my job schedule. Similarly, I should be able to look at my progress billings to date, contract to date, and this should tie to what is on my job schedule as well, which makes it a lot easier to reference this report versus trying to go in and look at a P&L by job. Because some people try and, well, I'm not saying that the P&L by job report is bad, but it's it can be a lot when you have quite a few jobs. That report gets pretty big very fast. So you're scrolling left to right. It's really hard to read. Job profitability summary report is going to put that information in kind of a concise format for you. So it's going to be a lot easier if you are completing a job schedule to pull those numbers from this report versus looking at a P&L by job report.
Yeah, and when I'm assisting a customer with a year-end WIP schedule, these reports are vital, or else we have to start running pivot tables on GL data, and it can definitely take an investment to get there.
Yeah. I mean, and you'd say, Clark, if these reports are tying out to the GL, that saves you a tremendous amount of time, right?
Yeah, if you were able to pull this in progress in the previous closed, it might make the job schedule process take 30 minutes to an hour versus me spending, maybe a whole day trying to digest the GL and understand what's open and closed during the year. And it tells you you're underbilled pretty darn quick on a lot,
Yeah.
You can just kind of eyeball these and know if maybe a WIP schedule even is going to add any value. And in this case, you can kind of tell it will.
And just to clarify too, even though you've changed the status to closed on these jobs, that doesn't prevent you from using those jobs in any transactions. You can still use those trends. All it is just a status, a piece. Let's just call it. It's just a field for us to filter by. So it doesn't turn off the ability to post anything to that job. Now, if that job was completed and that job was, several years old and you wanted it off there completely, you could go in and inactivate the job, and then it wouldn't show up on your list when you went to job cost. So like when you went to enter a job for that job would no longer appear on that list, but you have to inactivate that job to do that. It doesn't automatically do that when you select the status of closed. So that way, if you ever did miss an invoice and that was supposed to be on a job that's now has a status of closed, you can go back and enter that to that job.
And similarly with that other report that we were looking at, you can memorize it. So if you're filtering for just the closed jobs, you can memorize it. So it's easy. You don't have to remember what exactly you did every time to pull open the report and look at it, which can be pretty helpful. And I think I'd mentioned before that there are, situations where we do have home builders that maybe are coding some of their costs to the balance sheet. So there's WIP in progress construction account has a balance of $25,000 in it. This customer deposits account shows $27,500. We don't really have a clean way of being able to know what customers or jobs are comprising those balances. So one other really helpful report that we like to look at if you're in that situation is under these custom reports. If you go to summary, you can run this for the year. And if we choose account list and jobs, we can filter it for some specific accounts that we want to look at. So if we want to just look at that construction in progress account and we want to see what our customer deposits balance is, if we're just running this report for those two specific accounts, this is a nice summary report that is going to show you if I look at this report it shows my WIP balance is 25,000. If I look at my balance sheet, I know that that report ties. Similarly with the deposits, 27.5. If I look on here, it ties. It's negative 27.5.
One thing to add is I would usually use the from date as an open date because it's a balance. Those are balance sheet accounts. So you'll want to make sure that it's from the beginning of time to an actual date that you're running your balance sheet as of when you're comparing these, so that you're comparing apples to apples, because a balance sheet is just a picture in time. So it's going to include any transactions from, when you first set up QuickBooks through the date that we run the balance sheet.
If you're a home builder, you're going to have quite a few jobs. This is going to be really helpful for you to really summarize what's on your balance sheet as work in progress, what comprises what you've got for deposits from all your customers.
You can tell where you're behind on billing fairly quickly.
Exactly.
Yeah. So when we look at this, we can see right here that first job, we're behind on the billing, where the second job, we're okay. We're a little bit ahead.
Yeah.
So
it's got to capture at least our margin, hopefully.
Yeah.
If well.
Yeah. So this is a good report to customize a report like this and set it up. We call it an open job report, and we'll run this with any account that they're using on the balance sheet to track this. We'll also have some clients that will have separate lot inventory and lot loans and things like that as well, that will add to this report as well. But this helps because on the balance sheet, there's no other way to run a report, a balance sheet by job, to see where all these, where the amounts on the balance sheet are actually being coded to as it relates to jobs.
And we also do this for some of the P&L accounts too, like if we want to look at.
Yeah. So then I'll run a similar report like this and call it a closed job report, and I'll put the P&L accounts that we're using on there, so we can see in a format that shows the jobs going up and down rather than side to side, because it's easier to read when you're only looking at probably 4 or 5 GL accounts and you have 60 jobs.
So it'd be a quick way to know what's hitting your, in theory, closed jobs that might be
and what your
profit leaking out the back door you might not be billing for.
Yeah.
Got it.
And again, that's just under reports. If you go to custom reports summary, you can really do quite a bit of things with this report and change it to modify it if you want to split out your cost by job, which is really helpful. And if you're, like Mike mentioned, if you want to go in and change it, you can change the title of it to say, closed job report. And if I apply that, I can also just click here and do memorize, save it in my memorize group. So if I want to quickly open it, if I just go to my memorize tab, I can look at my closed job report, and it's just going to pull it up just like I had it. So I don't have to go back in and change all the filters and recustomize the report all over again. So just a valuable report in addition to the profitability reports that we've been talking about. I will mention that I think one of the things that we had looked at on here was, the fact that we were able to pretty much tie out what our costs were, but there was a small variance between what we were showing as revenue for the year versus what we were showing on the profit and loss statement. So I think construction income was showing, 755,000. But if I look at the profitability report, it's 753,000. And so it relates to, let's see here. You'll see here, there's a credit memo that is in this file for some, AR that was written off. Looks like he refused to pay, $2,500 on the invoice. Well, the way that this item is set up in QuickBooks is this bad debt item. You can go in and look under your items list to see how the accounting behind it is set up. And you're going to see that it's posting to an expense account, which makes sense. But the problem is that because this is a credit memo, it's going to reduce revenue on the profitability summary report. So while it's increasing an expense on the P&L, it's not decreasing revenue on the P&L. So that's why there's going to be that difference between what we're showing as, construction income on the P&L versus on the summary report, the $753,000. That $2,500 difference relates to that transaction. And there's not really a great way to get around that. It's just, you just have to be aware of the fact that there's going to be situations like that where we're going to know why there's a variance. We just have to be able to understand why the report is going to be a little bit different than what we're showing on the P&L.
Yeah, and we might even coach you to say, hey, it isn't really bad debt, it's a reduction of revenue, so that those do in fact tie and make the close process easier.
Right. Like if this was in this situation, I would probably take that bad debt item and I would have it go to construction income instead. That way it's properly reflected on the P&L to match the job profitability summary. Unless,
multiple reasons why you might want it there or here, but
it's just an important note that depending on how your item is set up in QuickBooks is going to really impact how the numbers are flowing through on the summary report.
I see the biggest variance on this report when I look at my home builders that are putting everything to the balance sheet. And so when they close out a job, then they'll do it on a sales receipt, and they'll put all the costs on as negative amounts on the sales receipt. So like their commission would be a negative amount on the sales receipt. Well, since it's showing up on a sales receipt rather than showing up as a cost, like it should be as an actual cost, it shows up as a reduction of the revenue. So this job profitability summary becomes not as useful in that situation for them, which is why we use that closed job summary report that we talked about a little bit ago, where we do a custom summary report and pick the P&L accounts that we want.
So I think that covers a lot of what we wanted to talk about with as far as it relates to the the summary report, and also the custom reports that you can generate in QuickBooks for if you've got balance sheet activity for your jobs, how you could summarize that. We'd also like to at least leave some time here at the end to answer any questions that might be you might have as it pertains to these reports, if there are.
These reports, the job profitability summary reports are going to be where you're going to use those reports to pull and populate your job in progress schedules. Your costs are going to be based on the period you're going to run those, and you're going to have for the entire job or for the current year, populating fields for deposit or for billings. This report, if everything's correct in this report, I can pretty much pull up and populate everything I need for actual costs and revenue for a job, for a in progress schedule. And then we'll only need the contract details as it relates to what the what's the contract price and what's your estimated cost for the contract in total to get our over under billings adjustments.
And we have a job in progress Excel template that would be more than happy to share with anybody. Let's see.
Since we have a few minutes and that we don't have any questions coming in, we can pull up one of those samples and kind of show you guys what we use for that. So here's a spreadsheet that we use for, this is the completed contracts, and then there's also a schedule of ones in progress. And so those columns in blue are going to be items that we're pulling directly from those job profitability reports. As for the costs, this is a contract to date, so we would make sure that that report had an open start date and then an end date of whatever date we were running this through. We would put the total costs in there. We'd have the total billings. With your progress billings would be your revenue column on the profitability report, job profitability summary report. And then if you scroll over a little bit to the other side, oh, sorry. And then the other things that you would enter is we would have to enter the contract amount, the current contract, which is going to be the original contract plus any change orders. And then your estimated construction cost, which is going to be your estimated cost plus the cost of your change orders as well. I just reiterate that because a lot of times clients will get a change order and they'll remember to go in and update the contract and forget to update their estimated costs for that additional change order. So make sure you're updating both of those when you get a change order.
And if we look at that in progress report for the period, if we want to change it here to just be the jobs in progress, I can look here and looks like my billings are 135,000. If I look at my, schedule of contracts in progress, that ties, which is good. Similarly, cost of construction, 121,000. It ties directly to this report. So it makes completing that job schedule a lot easier when you can reference those reports.
And then this gives it, then this report or this spreadsheet then will give us what our over billings are, what our under billings are, which is going to be crucial for bonding agents to see because they'll request this along with the financials. And then that's when we're going to also, at the end of the month, we're going to do a journal entry to adjust our over billings and under billings to actual through that over under billings account.
And while you can adjust it job by job, in theory, most of the time we just post it as a summary entry.
Yeah. And that's why in QuickBooks, if you open QuickBooks back up, Jimmy, and go to the P&L, that's why we recommend setting up a separate income account for that adjustment.
Right.
Instead of putting it in with construction account or construction income. That way we can specifically tie our construction income to the job summary report because the underbillings account is going to be all of our adjustments that we're not doing by particular job. You can, if you don't have very many jobs, you can do journal entries you can do a journal entry for each job. Or you can code the job and do the adjustment by each job. But if you have, 30, 40 jobs you're working on, you probably don't want to do that each month. But if you're a small, operation, you have 3 or 4 open jobs like we show on here, we could adjust it by each job. And that way it would be reflected in there properly.
Yeah, and then you could just send along the job profitability and not maybe the job schedule, which might give some additional details related to your anticipated margin and things like that. So
yeah,
that's a today was kind of about building the bones to make sure that you can actually get to a solid WIP schedule. And yeah, we deal with all shapes and sizes on this exact issue.
Yeah. And you'd even mentioned when we were looking at it, there might be some underbillings issues. You know, if we look at the job schedule, you know, we would be wondering, you know, we've got $42,000 of costs into this, you know, addition. We haven't billed anything yet. We're underbilled quite a bit. You know, having those profitability reports and being able to complete this WIP schedule is going to help you with the analysis if you're behind on your billings or if it makes sense because it's related to contract for why you haven't billed. But just going to be helpful to have.
Yeah, and if you're running these reports on an interim basis, it's important to make sure that your costs are in the same period that you're billing or that you're invoicing for as well. So we'll see a lot of times like the invoice, they're doing it on the 10th of the month or something, but it's for all the costs in the prior period. So, you know, here comes you're on June 30th, you're doing your invoice that you're sending to like the bank for a draw request, call it. And you're doing that on July 10th. Well, you enter that invoice on July 10th and all of your costs were through June 30th. Now we show big underbilling because that we really should be dating that invoice June 30th rather than July 10th. So it's
even worse, we don't run the percentage of completion calculation and it looks like your current ratio is underwater by an additional 60 grand.
Yeah.
So these work hand in hand with the users and what they want to see.
Yeah.
It's an important process.
Yeah. And the biggest thing I wanted to take from that was just that we want to make sure that those are matching in the periods, especially if you're giving these financials to outside parties. You want to make sure that you're not waiting until they come back and go, why are you underbilled by $80,000 to go, oh, I billed $80,000 on the 10th of July.
Yep.
So
one other important item to note is if you are, you know, updating the job status of the jobs in QuickBooks for these reports, you kind of have to do that pretty regularly, just because if you don't, then you're going to have stuff that populates on these reports that is not going to translate to your job schedule or, you know, isn't going to be helpful because the job closed or so on and so forth. So that's just one thing to also keep in mind.
The other thing I use that for too is I can then also run this for just closed jobs to see if, you know, what are my costs on, like if these jobs are closed and why do we have these additional costs coming through? Is it warranty expense or is somebody coding stuff to the incorrect job? Because if I think this job's already closed and then there's another $60,000 of expense coming through, I'm probably going, okay, wait, is this truly for this job? And if so, we thought we made a lot more money on this job than we actually did. Or, you know, what's going on with this job? Should it be coded to a different job? Or did we start another job with this customer and we haven't set that job up yet? Is there an addition? Is there
additional work?
Yeah, and it hasn't been billed for. So it's good it is nice to be able to filter those by a job status like that as to open, closed, or I should say in progress or closed is the word QuickBooks uses. Because it helps to make sure to do that. That's especially important on those home builders that I talked about that code all their costs to the balance sheet. Because if we have a job that we closed out and we never go back and look at those jobs for costs, we could be leaving expenses on the balance sheet that we should be writing off. So, you know, as long as you're running some sort of report, a detailed report, like Jimmy showed you that summary report by job for those balance sheet accounts and tying those out, you shouldn't be missing those. But if you're not running this report like that, you could be missing tons of jobs. We took over a client that was similar situation, and their accountant helped them and never went back and looked at the jobs after they were he closed them out. And there was a couple $100,000 sitting in construction in progress that never got expense that he never took the expenses for, that were on old jobs.
And that banking was probably giving him credit for
Yeah.
on his line of credit. So
Yeah, and similarly to that jobs in progress report, if we're looking at just the closed jobs, we can tie out our revenue and our since these jobs didn't cross over year, and our costs of construction, it's 461 ties to this report, just like we would expect it to. So
I think the biggest thing is we live in this every day. So some of this, might have been moved through quickly, but we're definitely here for any questions on A, financial statement items, and B, kind of the nuts and bolts behind how they get built.
Yep.
Yeah, and if you have any questions, feel free to reach out to either of us. We'd be happy to answer those for you. And we appreciate your time this afternoon and joining us for this webinar.